Hey folks, what a view behind me. I'm at Blackbull Markets headquarters here in Auckland, New Zealand. Speaking of views, you can get TradingView paid plans for free at Blackbull Markets, saving you up to $600 a year. Get either the Essential Plus or Premium plans absolutely free. All you need to do is trade from one lot a month at Blackbull Markets. And you can also get a 100% deposit bonus for your first deposit up to $1,000. All you need to do is click the Trading Nut link in the description below. Hey, start trading Forex indices and commodities with up to 800k of Blue Guardian's capital risk-free. Just pay a small one-time fee to take the challenge, hit a profit target and get funded. Then keep up to 90% of your profits and enjoy fast weekly payouts. Now for futures traders, Blue Guardian Futures offers up to 450k in funding with 100% profit on your first 15k. With low targets, no activation fees and unlimited resets, it's one of the best deals in the industry. Visit blueguardian.com or blueguardianfutures.com to start trading today and grab their limited time discount code.
Hey, what's going on, guys? This is Brinks Trades coming to you live with another week of breakdowns. Hope everybody is doing well. We got about 12 people on the line right now, so y'all know what I love to do. I love to drop the link into the actual my chat, see if we can get some more people on the call. Let's go ahead and do that right now. But you know the drill. If you guys are calling in, I'd love to see where you guys are calling in from. I love to see the people around the world that hop on these calls every week. No, I'm at my right scheduled time, which is a little bit earlier than I've been going on the last few weeks, but hopefully we get some people on the line. So again, my name is Brinks Trades. I am a day trader. I have about a decade of experience. I've been involved in the market since 2015. It actually, March 6th was my first day going live, 2015. So it'll be 10 years, a decade in 5 days. So Monday next week, something like that. So it's been a crazy journey up and down. I've learned a lot about the markets. I've learned a lot about myself in that time, and started in the Forex industries, changed over to futures about a year or two ago, just more professional markets and a lot more price action going on and a lot of fun things to do. So Emmanuel is calling in from Nigeria. What part of Nigeria, Emmanuel, are you calling in from? Emmanuel FX. Shout out to Emmanuel. Go follow him, subscribe to his channel. Let's see. So yeah, so I come on here every week and I do the breakdowns for a few assets. The first asset is the dollar index, right, in the currency futures, and then obviously the indices too that everybody loves to trade. So whether it's the CFDs, the NAS100s, or the actual NQs, ESs of the world, I'll come on here and do that. So break that stuff down for you guys, and yeah, I mean it's been a crazy journey, and I'd love every minute of it. So let's go ahead and get into the charts. Was doing some actually videos for my students the other day. If you're not involved in the profit playbook, I'll drop a link to that in a second, but it's my free community. It's a Discord community where I basically update stuff. And, I do these analysis on Saturday because the market opens up and sometimes the bias changes. Sometimes I drop free nuggets. You should definitely join that link and actually be a part of it because, it's free knowledge, right? Free game. And when I first started trading a decade ago, I would have loved to have free resources of people that walk through the charts every day and actually trade. And I tell that to everybody every week that my charts are messy every week because I actually really do this, right? So let's go ahead and look at dollar index. And we got a few things going on here, man. This has been a crazy couple of days in dollar. So weekly time frame, I'm actually going to go to the monthly time frame because we ended a month, right? We're going into this March 1st is a brand new month. So let's just go ahead and make these charts completely naked, right? No indicators, nothing on the charts. So as we can see here, we ended the month with dollar trading, pretty much in a bearish month. Now, the things that I've been calling out over the past few months is really just this trend line liquidity that was sitting here, right? And I said this low resistance liquidity run, I think we could run to that, right? We could run back up to 111.93 and really take out that high. Now that's a long-term play. This is a monthly calendar, so each one of these, or monthly time frames, each one of these candles represents a month. So this could be months, maybe even next year thing, right? If we run back up here. But that's something that I kept in mind. But obviously you have to stay with what current price action is going. And so we can see that this past month, if we look here, we pretty much swept this low of liquidity right there, right? And so we took out that low and did a couple things. The way we closed, we actually respected consequent encroachment of this monthly wick. And I believe consequent encroachment of that previous wick too. So this is still bearish, to be completely honest, on the monthly time frame, right? Even though we had a bearish month, or still bullish, I'm sorry, even though we had a bearish month. So going down to the weekly, obviously that's the weekly time frame. So or the monthly time frame, that stuff takes a long time to play out. It could take weeks, months, even for us to see any significant changes on that time frame. So what we really want to work with on a day-to-day basis are daily and our weekly time frames at a high level. And so I said a few things, right? So there was a couple fair value gaps that I wanted to see respected on this time frame. And so I called this out last week, and I said, if you guys go back and watch last week's tape, I said I wanted to see the market ultimately run for this low, but I wanted to see how the market respected consequent encroachment of this order block right here. So that 50% level of that order block. And I said, in a perfect scenario, this would have been the first target for this week. Higher, like a longer term target would have been here, but we need to close below here. And so what did the market give us? Well, if we look at things from a perspective, higher time frame weekly perspective, we came down here, wicked off of the mean threshold of that order block or the consequent encroachment level, and started to turn right back around. And so obviously you can't see this in the moment, but when we inverted this fair value gap here on the daily, it let me know that we could be potentially heading back up again. So we started this week off by running, pretty much doing what I thought we were going to do, trading back up into this overall dollar index fair value gap right there. I said, um, actually, I'm sorry, this was last week. So last week, we traded back up into this fair value gap here, respected it initially, wicked all the way down, tried to get through consequent encroachment 1, 2, and 3 times and could not break. This is why we map consequent encroachment on our charts at all times, because again, that weekly level is so important, because if we have 3 days of price action where it tries to trade through once, twice, and 3 times, that's a really good sign that the market is really just kind of sweeping liquidity and not really trying to go higher. So when we inverted this again, my attention really started shifting back to the bullishness of this. So we are, bullish again. And so the crazy thing with currencies and honestly dollar index is that we've really been in a tight range. So this trading is really difficult. I'm not gonna lie to you. So looking for setups in this has been there's been a few setups that have played out, and I outlined a few things to my chat. We took 3 trades on stream last week, and there were 2 winners, 1 loser, I think. And 2 of those were on currency, 1 of those was on Nasdaq. And so again, trading in this range is really difficult because you only really can look at price in a very short-term manner. You can't really look at these wide projections like you would have if they were like runs like this, right? And so this is just normal chop, right? This is what happens in the markets. So what I'm looking at here, and when you're trading in these ranges, you have to be very, very short-term minded, right? Because ideally, even though I think long-term we're still going to go higher, we still have to trade within what we see here. So now that we're respecting this volume imbalance here, I really want to see, and we're on the verge of inverting this fair value gap. We haven't quite done it yet. We're pretty much still respecting it. So where we're at here, I'm anticipating it breaking, but I can't really call it until we get a daily close above. The minute that happens, I'm looking at 2 levels. I'm going to get rid of some things here so you guys can see better. There is a very, very slight volume imbalance here. Like very, very slight that I want to see the market run to. But I'm really, really interested in this high. Let's get rid of that. I'm really, really interested in this high here at 108.42. And because this is a long wick, we also have to be interested in the consequent encroachment of this wick, which is about here. So there's 3 levels here that I'm looking on the upside. All of this depends on us inverting this gap. Technically, we broke in structure, we took out a swing high, inverted the fair value gap. This is a bullish market structure, right? So I anticipate this fair value gap to break, and I anticipate this running higher. And so these are the 3 levels on dollar that I want to see potentially price hit, over the next few days. Again, all of this depends on us closing above here. We need to see a significant, not a significant, but a noticeable close above this fair value gap. Right now, we're still technically respecting it. But just because we inverted this and really, we're pretty much on the edge of inverting this one too. I think we're probably going to go higher. I think it's kind of safe to say. But we could also do something like this next week where we come out wick higher and then run lower for the week. So I need to see this close. We're pretty much close to that. I wouldn't be surprised if we did, but it also have to be safe and wait for confirmations on that. So when this fully inverts, then I'll start looking at upside targets. If we trade back into the range, I'm either going to be flat or just kind of wait to the market to give us something there. So that's kind of my game plan for dollar index and what I want to see happen. And so because of that, again, I'm going to start leaning for a bullish week on dollar. I have to kind of look at euro and look at the market is transitioning back into a downtrend. And so unfortunately, last week we came to the markets and we wanted to see the market take out this high. And we did get a very bullish Tuesday. And I thought we were going to continue on to really run that high initially on euro. And market just tanked. It tanked. So what am I looking for now? I'm really going to be looking for bearish structure. And again, we're trading in choppy conditions. So you have to be very, very nimble with your targets. And you have to be very, very, you can't really, this is not market conditions on currencies where you can really try to hit home runs, right? Because there's not going to be a ton of just dealing in consolidated ranges. You don't really want to try and hold things. You want to find a quick target and aim that and take it, to those lows or highs. So getting rid of all of this, again, last week, I wanted to see the market really come up and run and take this high. When we failed to get above, we really failed to get above this high that was set on last Friday. We traded above it a few times and really closed back below it and then broke structure. It's kind of let me know that we're probably going to keep going down. So what are we working with currently? Got a volume imbalance there. And I want to go back to the monthly time frame here too, before I even go back down on Euro futures. And again, Euro futures is going to be the same thing as Euro USD if you guys are Forex traders. So same thing here, low resistance liquidity run here. We traded back up into this wick. Obviously, we treat these wicks like gaps too, right? So we talk about consequent encroachment, boom, 50% level was traded to and respected. So it's letting us know right then and there that the market wants to continue to go down. I'm taking things again day by day, week by week. I'm not trying to give a long-term prediction because we still are trading in a consolidated range. There is liquidity built up here since we failed to get above these highs. But just this break in market structure really says that we could continue to run at least for this low, right? So overall, though, this is choppiness, right? So when you're trading these ranges, like when you can't get a clear bias or clear trend, you either need to look for very, very short-term targets or you need to stay away from the market. And to be honest, there hasn't been a ton of great setups that I've looked at on currency or euros. Everything's been really choppy, even on the smaller time frames. Price will run, but it hasn't been running as cleanly as I want to see. Which this happens at any market, right? Like when we go to Nasdaq, we're going to see a ton of, like, just choppiness over the past few weeks. So past few months, really since Christmas. So again, since we are trading in a very small range, I can't really look at anything that's gone on in the past. I really have to stick with what current objectives are, what's the current level of sell side or buy side that we can run to. So again, sell side's rest here. I'm gonna want to see the market run for that. So that's what I'm going to be looking for, this low to be taken here. And again, once we get here, it's not a hard stretch for us to consider the market really coming back down here. But I mean, it has been in chop for the last few weeks. So on a weekly level, we're still, I mean, overall, we are still bearish, right? We like, this is, it's been on the weekly time frames, we haven't really fully broken structure yet. Now, when we look at pound futures, it's going to give us a little bit of a different story. And so we'll talk about that in a second. But ideally, based on this time frame alone and this chart alone, I want to see the market run lower. We could run back into this gap, right? Or respect this volume imbalance, one of these two levels here, and then go higher or lower. I'm going to be looking to see how the market reacts to these, because this could just be a Judas swing or like a fake out, right? Where we run, take liquidity, and then next week we go back up and take these highs. My eyes are still drawn here because these are relative equal highs. So there's a lot going on. There's a lot that I can frame out as far as a good trade, like not a good trade, but trading, setups. And the market really has not gotten to that high. So I think because we were running up, taking out liquidity here and broke structure, I think we're going to keep going down. But this is not it's not easy trading by any means, right? Especially when you're trading in a range. So ideally, I want to see the market run for this low of 1.037. But it really depends on how we use this gap. If this gap gets inverted, then we're probably going to go back up. But going on with pairing this with what dollar is giving us, I want to see the markets run lower. I want to see the markets run lower. So this is what I want to see us potentially trade back into one of these two gaps here and then go lower for the week. I'll look at news in a second to see what's going on there. So that's a lot of analysis, but when you're trading these ranges, you got to be very nimble, very quick. Now, the cool thing about this one here on pound futures, again, same thing as GBP USD, is let's go to the monthly here. And just like everything, this is a mess, right? And the one thing about currencies is that even though it moves slower, and I tell my students to start here and learn these concepts, right? Because if you see these things play out, you have a lot of time to react to them. You can sit there and trade the 15-minute time frame, and actually have a lot of more time to relax and look for trades, and walk your way and think your way through it, as opposed to starting out on something like Nasdaq or NAS100, which it seems like everybody wants to trade, which is cool. But it's if you don't really have a strategy, you get punched in the mouth and just start reacting. And I think a lot of times that's what happens on Nasdaq. So you really have to know what you're going in for. And you really have to know what it is that you're trying to do there and your objective, and make sure your risk is managed to a T, because you can blow an account real quick. I got some stories for y'all on just over my 10-year journey. So yeah, if you don't respect risk, it's wraps for you. It doesn't matter how experienced you get. Afri, what's up, brother from South Africa? Shout out South Africa, man. We got a lot of African traders on here. I'm not mad at it though, man. Christian Capone. Shout out to you, man. I think you just joined the Discord too. I put the link into the Discord. I saw that last name pop up on the Discord on my app a second ago. So shout out to you again. It's a free resource, man. If y'all are not taking advantage of that Discord, I'll drop the link in a second when we start talking about indices. But yeah, so when we're looking at British pound, again, we broke structure here. We ran these lows over the past few months. We're trading back up into this range here. We had respected this fair value gap here, just on a monthly level. We respected it to a T and pretty much reclaimed it. So it's just a lot of choppiness and consolidation going on. But what we're looking at here is we're looking at, well, what can we frame out here that's an obvious draw on liquidity, right? And it's this. So we basically tried to run up here. Again, I thought we were going to come run, take this out. And we broke structure. I'll remove this. So again, last week I wanted to see the market run there. This breaking structure, really taking out these lows, does not make me confident. So we really have to frame something else that we can go short on. If the market's bearish, just trying to run to sell side or fill an old imbalance. There's this one right here. This could play out a couple different ways once we hit here. It could do something like that and continue to run back up. Because if we look at the weekly time frame, we did break structure. We did invert this fair value gap here, break structure, and then run higher. So technically, unlike Euro, this is a clean break on the weekly time frame, which signals a potential longer term trend. But really how we use this gap is going to be important. If we invert this, then we're back to a bearish run. And I could see this low resistance liquidity right there getting hit, which, to be honest, I wouldn't be mad at, because I think there's more room to run to the downside than the upside. So that's what I want to see. So this gap is going to be very important, right, on Euro or on pound futures, how we react to this. And we'll know kind of about how the week starts off, right? So if we spend the first few days of the week trading back into this volume imbalance here, trying to go higher, maybe even trading into that gap or trading to this level right here, then we could spend the rest of the week going down and it could invert. Now, if we hit here first, and this could probably be a reversal. So I'm just looking to see what happens here. But overall, I want to see what happens when the market hits this target. And if I do catch a bearish setup that takes us down there, I might take it. But overall, this market has been choppy really since Christmas. I mean, the last few months were great. We had all of this price action here. It's just great. And then, yeah, it just was chop. It's like one big run, then chop, 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 chop. One big run, chop, 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 chop. The markets here are very efficient. So which could be good or bad. It's good to learn on, but it's not great to try and look for trades every day. But I recommend, if you guys are new, start on Forex, just because when you're learning concepts, you're learning the strategy. It's good to learn on something slow. It's good to learn on something that doesn't move as much, because your emotions aren't as evolved and you can really learn. And if you feel like you can stay here forever, or if you wanted to move on to Nasdaq indices or more cleaner markets, then that's always the case. So let me go to the comment section real quick. Again, I don't see anything. So what I want to talk about now is Nasdaq, because Nasdaq is tripping. Like this thing is tripping. Okay, so weekly time frame. Honestly, looking at the monthly time frame here, it's just chop. It's been choppy, chop, chop. And to be honest, it's not been fun. Any long term trying to predict, right? And so when you're dealing with these consolidated ranges, you have to stop trying to project long term, but you have to look at what's the closest draw that we can run to, that we can get a level and find a frame a trade setup. So what happened last week is we inverted this fair value gap right there. Boom. And I figured when we took out that gap right there and inverted that we would at least run to here. It's kind of what I said. I said I wanted to see the market. If you guys go back and watch, I wanted to see the market at least run for sell side here. But it extended and really took out that range. And again, anytime you can frame out like a trend line, it's usually a good indication that, if the market might hit that entire thing. So this low resistance liquidity right there, all of that got hit. So What happens next? I guarantee you everybody in the market is thinking sell, 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 sell. So we kind of have to ask ourselves here, what are the potential scenarios long term that can happen? Well, we could definitely keep running lower, right? And if we do, then we're looking at that for the next daily level to get hit, right? I think what will be important is how do we manage this fair value gap, right? Do we invert this? If we invert this, then we're looking at potentially run into a higher level, like either this higher here or this fair value gap. So I'm going to be watching these again. I would like to go with the idea of bearishness, like gun to my head. You see this, you see bearishness, and you see the market wanting to probably react from that. And this could be a really cool opportunity to get short on some things. But we really want to see how this market entreats that gap there. We did break structure on the weekly too. So, I mean, like, technically there's room to go bearish. But again, I'm gonna be looking to see how this trades. Again, any prediction that's made is just that, it's a prediction, right? The market can happen. Like tomorrow, we could have two world leaders scrapping in the White House, right? Again, and the market could tank based on that, right? So it's like we don't really know for certain, but we just can frame out ideas based on what the current draw on liquidity is. So currently, this is what I want to see happen as of Sunday. But again, it's going to be very dependent on what happens with this fair value gap. So ideally, this is what I'm looking at. Very quick, clean, easy. If we invert this, then I could potentially be looking for buys because we did run a level of sell side. So we'll see what happens. If we invert this, then this could be a couple days of just rise, and I would be looking at this high here or this secondary fair value gap. So I want to know what Monday's going to give us. Are we going to continue this bearishness that we've had, or are we running for this low? So, I mean, gun in my head, I want to see the market go lower, but just with all of this chop that we've had over the past few weeks and months since Christmas, I wouldn't be surprised. So there's a lot of things up in the air. Everybody's kind of heard about the tariff situations, and so there's like some macro level stuff that the market makers could frame as a reason to take the markets lower, right? And so, not that I really don't think any of those things really drive market price. Like it's all a big game, and it's just news is used as kind of like PR, right? It's used to make people want to do things. To be completely honest, because if something happens right now, there's technically no reason the market should tank or crash. Like if we got into a war right now, there's technically no reason that the market should crash other than people wanting to pull their money out, right? That's all it is. So fear. Boom. So all right, next thing we want to see here is let's go look at not Nasdaq, but ES. Yeah, this is chop. Like this shit, this is crazy. It's like this has been 3 months of trading, right? Pretty much ever since we determined who the president was going to be, this has been chopping back and forth. I'm not saying those things are correlated, but it could be. I try not to focus on that. I try to just focus on the setups. But if we look at the weekly time frame, one thing here that I do like, or that I'm noticing right off the bat, is that there is no fair value gap here. And so this could be a sign that the markets are going to invert that other gap. So if I put these things side by side, right, and I go daily here. So NQ and ES, and I like to compare these when I trade. If you notice here, NQ has a fair value gap, and we're in a bearish run, so we should be expecting the market to go bearish. But ES does not have a fair value gap. ES is going to be your US500, right? For you guys that are global traders, US500, and this is going to be your US100 or NAS100 or whatever your broker says. So if you look here, there's not really any fair value gap, and there is one here. So this could be a sign that the market could be ready to invert this and go higher. If I'm looking at, yeah. So we don't really know for certain. And so if that's the case, then all of this could have just been a liquidity sweep. And then just looking at other things here, we did invert this fair value gap too. But we haven't really done anything. So there's a lot of question marks here in ES. I don't like ES as much because there's nothing for me to want to get short on, like up here, for us to continue this bearish trend. It's really kind of still trading in this range. And if we're looking at kind of like, this could be an example of, oops, sorry guys. Refresh that. This could be an example of low resistance liquidity and kind of like your divergence, right? Too. So there's a couple of things that I'm seeing here, and I just kind of want to see more price action before I really take a trade. Let me go back to ES here. Yeah, thank you. The other thing too is looking at this low. I just kind of saw it. I guess not. No, that's right. Yeah. So notice on this, we have some divergence right there. So this low was taken. And if you look on the right side of my screen, you can see kind of like the days this lines up with ES. So you got some divergence taken right there. But if you go over to ES, we did not take that low. And so that kind of lets us know that this could potentially invert. So I want to actually, with that in mind, I want to see how Monday reacts because of that, right? Because we took that level right there, but we failed to take this level. That could be the market's way of saying that, we're going to run up, and this is just kind of a Judas swing. So I'm honestly not too sure, man. I want more information, right? And so there are going to be days like this, especially when we've been trading in a range for so long, that the market is going to go higher or lower. Again, I would say if we invert this and then like we invert this fair value gap, I'm sorry. So like we have this divergence run here and here, but then if we invert this and take things higher, like I would say that's a really good sign that we're going to keep running up. So that's kind of like what I would look at this week is how are we inverting these gaps? How are we running through this? So ES in theory could run back up. And I think I do like the fact that ES failed to go lower and it doesn't have a fair value gap. So that's actually a really good sign. So let's go ahead and look at YM. Let's add YM to the mix. Can we get three? Can we get three side by side by side? I can't. I'm not paying for the new thing anymore. My card must have canceled. I got a new bank card last week, so I gotta update all my stuff. All right, so let's go ahead and go to YM real quick. Let's get rid of this. Let's go back down to 1. YM. So what are we seeing here? We traded back into this fair value gap here. This is exactly what we wanted to see. So if we look at the last few days, this actually played out. And I told you guys like on the call last week, I'm not a fan of trading US30. It's not really my favorite pair, but this thing played out pretty much exactly what we wanted to see. So what happened? I said I wanted to see this inverted fair value gap retested. Boom. So let's move this out of the way for now. But in addition to that getting retested, we also framed out a fair value gap. And this is why it's so important. Dang, where my shapes at? This is why it's so important to take things and run low, one target at a time, because this, I mean, in theory, I thought the market could run to this low here, but you want to take things very carefully because you never really know what liquidity level is the level that the market is going to be using for its overall draw, or kind of like where the orders are sitting at. So when we trade from this fair value gap here, I said, okay, we could probably trade into this and then go lower. So we did once, twice, and then traded directly into that gap, right? Just tap that gap. And then the next day ran down into a little bit more, stopped high consequent encroachment and took things up. So this is pretty much like an engulfing almost, right? Like we pretty much engulfed all of this. So I would not be surprised if the market decided that it was going to invert this and go back up just in line with the other ideas. So I think as I'm like kind of talking my way through this, I think I do want to see the markets on all of these go up next week. I know it sounds a little crazy, especially after the week we've had. But there's a lot of price action here. Again, I need to see this inverted. I need to see the market invert this, and maybe I'd be looking to take this higher. So again, that's what I want to see happen there. So yeah, so I think we're bullish on all three, potentially, with regards to this fair value gap. Again, I'm going to write here, want to see inverted before going long. Put that there. Stretch that out. I want to see that inverted before going long. I'm actually going to take copies of this and put these all in my community. If you guys are in my trading community, again, you know, you guys are getting free stuff, man. And like in this world where everybody wants to charge for every and anything, man, take advantage. So that's the first thing. So that's, again, Nasdaq. I'm long on all these. So that's pretty much all I got for you guys. So I'll stay on for any questions. You know, y'all know I love to answer questions. So I'll stay on for any questions here that you guys have. But again, that fair value gap, the high of that is 44,053. So once we take that out, I want to see the market continue to go higher. And Q, again, I want to see this inverted here at 21,032. And then ES, same idea, right? Like, I just want to see this run higher, to be honest. Now, again, if those gaps get respected, then this is all off, right? Like then I'm going to hold. I'm not going to probably try and take any positions, right? I want to see something play out with this overall bias. So I will only go long. And usually I only trade NQ. Like that's kind of the one that I just trade the most. But I will only really go long if this inverts. I think that'll be a clear signal that the market wants to continue to go up. So that's what I got for you guys. And hopefully y'all get some value out of this, but I'll stay on for any questions. So what time frame was NAS100? This is all higher time frame work. This is daily time frame. Everything is daily. So I'm looking. So basically, these calls I never really get lower than maybe a 4 hour, and I'm not trading off of these charts, right? Like I don't have the capital to trade a contract on NQ based on the daily time frame. So I'm looking for trades that line up with my overall bias on the smaller time frames, right? The 1 minute to 5 minute, right? And I have a systematic way that I go into the markets and look for positions. So based on that, then that's what I use to frame out my trading ideas for the next week. So yeah. Let's see what other questions we got. If y'all got time, I got time today, man. So if y'all got questions about trading, anything in general, yeah, throw them in the chat. This is like the best opportunity right now. Again, I'm dropping a link to my free community here. If you guys are familiar with it, or if you guys have, this is your first time following me, feel free to jump in. But You can take advantage of that. It's a free Discord. I promise you, does not cost you a dime. There are levels for mentorship though, right? So these are the free students and mentorship students all in one place. In the past, I kind of had like a bunch of different telegrams that I was running for my mentorship group and in the paid group too, or the free group. So again, I have everybody in one place, and certain people have certain access to certain things. So if you're a mentorship student, you got full access to the whole thing. You guys can see me trade 3 times a week. You get access to the Whoop course where I teach all these things. For my students, I'm uploading this weekend all of the uh, indices models and things like that I've been talking about. Yeah, so that's going to go in addition to the currencies. Right now, we've really been focusing on currencies because if you're one of my students, I want you guys to focus on currencies first because you can see the concepts play out slower. You have time to think your way through the trades. There's not going to be trades every day, right? You might get 2 a week. If you're looking at a currency pair, you might get 2 trades a week. Nasdaq is probably a better option for people who are looking for trades more frequently, right? You can find something to get a setup on at least maybe 2, 3 times a week. But while you're learning the concepts, it's so important to understand and fully understand how price moves, how it relates, what these candlesticks are trying to tell you in price. And that's why I tell everybody to go to Forex or go to currencies first. And that way you can you can just learn the most about things. So um let's see. So I got questions, I got time. I'll stay on until about 11:05. Feel free to hop in with anything that you guys are struggling with, or if you guys want general trading advice. I can't get too deep into my strategy just out of respect for my mentorship students, but we can cover a lot. So I did take a few trades on stream last week. There was two, one on Euro futures and then one on Nasdaq. Uh, the Nasdaq one was really cool. It was a model that I'm going to be uploading to the chat. I actually made the video last night for it. So I know there's a lot of people that asked me about that particular model. It's an opening range gap model. And I have like 3 or 4 different ways that you can look at the market for my traders. But I want you guys to pick one. I tell them this all the time. It's not really good to system hop, but an entry hop, right? You want to have one good model that you can use over and over again. And if the market doesn't present itself with that, then you sit out, right? A lot of times people system hop because they take losses or they take a string of losses and they think that their system stopped working. And to be honest, there's no one system that you're going to use that's going to avoid losses. And even if you use 10 of them all together, um, you you you're not going to avoid. I mean, you're probably going to put a lot of stress on yourself trying to just find trades. It gets to be a point where you're over seeking, trying to find something, and if it's not there, then you gotta let it go. So I'm not seeing any other questions today. It's 36 people on the call, so I get a lot of questions on at this time, but ideally, uh, that's what I want to see happen this week for everything. So we'll see what happens. I did. There was one person that, so I told everybody that there would be a contest, basically for anybody that joins the free chat. And maybe I'll do them regularly, but there'll be one person that gains access to the mentorship chat. I actually picked that person this morning. So basically every once in a while, it's another reason why, you should be a part of the free chat is, I occasionally pick one person and give them pretty much lifetime access to the main chat. And so I did that this morning. And so they'll get access to everything that I have in terms of mentorships, the actual live sessions trading every day, and then a weekly Sunday call where we just kind of go over the market. So, and kind of address their problem specifically. So hopefully that helps all y'all. But yeah, man, take advantage. I hate repeating myself, but take advantage. I'm only saying this because I wish I had somebody like me years ago that could have shortened the curve for me, because I've been trading for a decade and it took me about 5 years to be even somewhat profitable. And I wish I would have had someone that could pull me in line and structure things for me in a way better way. So, but yeah, so looks like we don't have any questions, so I'll let you guys go. But have a good week. And then also, if you want to follow me, you can find me on Brinks Trades. That is my social media. Again, anything on Instagram, YouTube, TikTok, you're going to see that logo with the cartoon guy, the cartoon me, and that's my logo. So if you guys have any questions, hit me there, and I'll catch y'all next week. Peace.
Hey folks, what a view behind me. I'm at Black Bull Markets headquarters here in Auckland, New Zealand. Speaking of views, you can get TradingView paid plans for free at Black Bull Markets, saving you up to $600 a year. Get either the Essential Plus or Premium plans absolutely free. All you need to do is trade from one lot a month at Black Bull Markets. And you can also get a 100% deposit bonus for your first deposit up to $1,000. All you need to do is click the Trading Nut link in the description below. Hey, start trading Forex indices and commodities with up to 800k of Blue Guardian's capital risk-free. Just pay a small one-time fee to take the challenge, hit a profit target and get funded. Then keep up to 90% of your profits and enjoy fast weekly payouts. Now for futures traders, Blue Guardian Futures offers up to 450k in funding with 100% profit on your first 15k. With low targets, no activation fees and unlimited resets, it's one of the best deals in the industry. Visit blueguardian.com or blueguardianfutures.com to start trading today and grab their limited time discount code.